Having dispelled default and bank crisis fears, Wall Street is extending confident gains. Stock investors are anticipating a pause in the Fed's monetary tightening as they collected enough evidence to foresee this policy move. The stock market had a sluggish session yesterday, though the major indexes closed with a modest growth. The Dow Jones looked a 0.03% uptick. The Nasdaq climbed by 0.36% and the S&P 500 rose by 0.24% or 10 points to close at 4,283 points. The major stock indexes maintained the optimistic sentiment of yesterday, and the S&P 500 is expected to trade in the intraday corridor between 4,240 and 4,310. Stock investors decided to take a breather after the S&P 500 surged by almost 20% from the lows of October 2022, and the index owes its growth to the rally in the high-tech stocks. The upbeat revenue and the hopes for a completion in the Fed cycle of rate hikes, and the recent economic data and the dovish remarks from the Fed's policymakers increased the likelihood that the U.S. Central Bank would put interest rates on a hold at the policy meeting next week. Fed funds futures showed that traders have estimated an 80% chance that the central bank would keep interest rates in the 5 or 5.25% range. However, there is a 50% chance of a 25 basis point hike in July. The market will get a clearer picture after the release of inflation data. Fintech shares rose by 1.33%, leading gains among the 11 major sectors of the S&P 500, while the regional banking index jumped by 5.41%. In terms of individual stocks, Coinbase Global's move was the most considerable. The company's shares stumbled by 12.09% after the U.S. Securities and Exchange Commission sued the crypto exchange, accusing it of illegal activities without prior registration with the regulator. Apple widened losses and fell by 0.21% a day after the iPhone maker introduced the high-tech Prices Vision Pro augmented reality headset. Advanced micro devices rose by 5.34% after Piper Sandler raised its share price target to $250. On Wednesday, futures for U.S. stock indexes continued to trade moderately as investors remain cautious ahead of inflation data and the Federal Reserve meeting next week. At the same time, the volatility of the U.S. stock market returned to the pre-pandemic lows. The Week's Fear Index closed below 14 on a Tuesday for the first time since February 2020, and the score is more than 5 points below the 33-year average. A widely anticipated pause in the Federal Reserve's aggressive rate hike campaign next week is a clearly uplifting sentiment. Fed funds futures now show only a 1 in 5 chance of another tightening on June 14th. The updated global forecasts are made with a caution. The Organization for Economic Cooperation and Development and the World Bank have upgraded the global growth forecast for 2023 over the past 24 hours. The dismal China's export data for May could cast doubt on these growth scenarios. China's exports fell 7.5% year-on-year in May, much sharper than the projected 0.4% fall. It's also the biggest decline since January. This reading rates concerns about global demand. At the same time, the data may signal that inflationary pressure triggered by the reopening of China's economy this year may not be so strong. Today, market participants found out an increase in the U.S. trade deficit The US trade deficit widened to a 6-month high of $74.6 billion in April, up from a gap of $60.6 billion in March, and market forecast for a deficit of $75.2 billion. Exports fell by 3.6%, primarily driven by crude oil, fuel oil, pharmaceuticals, gems, jewelry, and financial services. Imports increased by 1.5%, driven by cars, manufactured goods, and materials. Interestingly, the market gave a muted response to the trade balance data, and the risky assets accelerated their rally in the pre-market. Amid an optimistic background on the Wall Street, stocks have risen strongly this year. Analysts suggest that profit-taking may not be far off. The Nasdaq is up more than 40% from its October lows, not showing a decent correction since mid-March, and thus a downward correction on Wall Street is around the corner. Among individual stocks, Netflix rose by 2.2% in pre-market trading after Wells Fargo raised its share price target to $500 from $400 a share, the highest on Wall Street. Coinbase shares jumped by 3.9% after hitting a 7-month low on a Tuesday as the Securities and Exchange Commission filed a lawsuit against the largest cryptocurrency exchange. ARK Invest CEO Katie Wood bought 419,000 Coinbase shares on Tuesday. Additional support for the indexes today may be provided by recovering securities of the companies in the energy sector. The US dollar is on the defensive, trading sluggishly in the New York pre-market. The index shed 0.2% intraday to trade at 103.9. The instrument is likely to hold in the corridor between 103.70 and 104.30. The reason behind the greenback's weakness on a Wednesday is that investors are not making bets on a rate hike next week. Yesterday, the Reserve Bank of Australia delivered a surprise rate hike, and the same move is expected from the Bank of Canada. In this context, the US dollar has lost its luster. The US dollar index has added almost 3% in the last months, amid hopes that the Federal Reserve will decide to maintain high interest rates for longer than expected. There is a bit of a mixed picture right now, though some central banks decided to hit a pause button. They seem poised to return to tightening, and the Fed may do the same. Inflation remains stubborn in the United States as well as in much of the G10. This means that the central banks are probably not finished yet, which means that it's too early to send the dollar to the bank. The Canadian dollar is trading in a confidence. The USD cut pair edged down by 0.5% to trade at 1.3390. The instrument is expected to trade in the intraday corridor between 1.3340 and 1.3470, depending on the Bank of Canada's policy update. The odds are 50-50 between the loonies up and down, as are bets that the Bank of Canada will raise its key rate by 25 basis points again after leaving it at a 15-year high of 4.5% since January. The Bank of Canada anticipates that the slowdown in economic growth will return inflation to the target level of 2%, but Canada's economy expanded at an annual rate of 3.1% in the first quarter, beating the Bank of Canada's forecast of 2.3% and likely perked up even more in April. Canada's May employment data due on a Friday, and will provide further evidence of the relative strength of the economy. Chief McClellan straightforward and previously stated that the regulator is mainly interested in the well-being of households. As for oil, which traditionally supports the loonie, the quotes have slightly recovered today. Brent crude futures rose by 0.4% to $76 a barrel, and US crude to WTI added 0.6%. The crypto market is still trading on a roller coaster due to the standoff between crypto platforms and watchdogs. Bitcoin briefly rebounded to 27,000 and dipped by 0.7% to 26,700. Popular altcoins including Ethereum, Solana, Binance and Litecoin are trading mainly in the red. Ripple is the only token to grow by 0.9%. The reason behind the doom and gloom in the crypto market is the crusade of the Securities and Exchange Commission against crypto platforms Binance and Coinbase. On Tuesday, in a complaint filed in a federal court in Manhattan, the commission said that Coinbase had made billions of dollars since at least 2019 by acting as an intermediary in cryptocurrency transactions, evading disclosure requirements aimed at protecting investors. The commission also said that Coinbase traded at least 13 crypto assets that needed to be registered, including tokens such as Solana, Cardano and Polygon, and Commission made the same accusations against Binance a day earlier. Since the lawsuit was published, Coinbase has lost about $1.28 billion in the net customer flight. Shares of a parent company, Coinbase Global, closed down 12.1% and after falling 21% earlier. Besides, the U.S. Securities and Exchange Commission took strong action by filing an emergency petition on a Tuesday demanding the freezing of assets controlled by BAM Management US Holdings and BAM Trading Services, which operate Binance US. In addition, the order prohibits Binance from taking any action that results in the deletion, alteration or cancelment of important documents, and the court granted the request. After this news, investors became worried. However, Dow assured that the impact was limited to Binance US and did not affect Binance.com or other funds. The Commission makes it almost impossible for a few altcoins to live, and it actually drives traders back to Bitcoin. The flagship crypto recovered fairly quickly and returned to the 26,650 and 27,350 range again. Going beyond these borders could lead the price to a retest of the 25,700 level. A rise above 27,350 looks unlikely. And that's all for today. We keep monitoring the financial market situation and wish you a successful trading day ending. Subscribe to our channel and see you online tomorrow.